So how are you all doing? Awesome? Okay, that was an insightful session, isn't it? Pardon?
Hello, everyone. So,
So $88,000 was the number that was given, and the numbers are going to be much bigger actually, depending. For one of the projects, he was indicating that he had to spend $88,000. Okay, so thank you again, Deepak. I want to give a little bit of a primer, okay, for the next session, because it's going to be a very unique session. If you all carefully observe the agenda, by the way, like you all can visit events.ateausa.org for the event schedule. So if you critically look at the event schedule, there will be a session, AI for Success, okay, Roadmap to Victory. The abstract is AI for Success, Roadmap to Victory, powered by intelligence, redefining, okay, what is possible, achieving what used to be impossible. Success is no longer linear, okay? That used to be the abstract. So several like great sound bites, isn't it? And that session was supposed to be delivered by me, but I'm not going to speak on that. The reason is I told Arun after looking at the session abstract, looking at the entire agenda schedule, okay, there are enough topics to ensure that everyone attending here, okay, they are going to achieve success. So AI for Success as a separate topic is not needed. So let's take a deep breath, okay, and let's imagine that we have already achieved success. Now it is time to protect your success, okay? The uniqueness of the next session is, it is AI for protecting success. So Arun already gave a cue about AI for insurance, but we are giving a different twist to the topic, AI for protecting success. This AI is not artificial intelligence, it is awareness intelligence. So I'm going to request Arun to come to the stage to introduce the next speaker who is going to speak about AI for protecting success. So once again, like, let's give it up for Arun to come and briefly invite Vignesh to give like more context into this session.
When vision meets purpose, great things emerge. Meet an entrepreneur and leader who turned ambition into action, founding a firm built on trust, integrity, and client-first financial solutions. As the founder of a forward-thinking advisory and insurance firm, he's committed to delivering personalized financial strategies, navigating life's uncertainties so clients can focus on growth, security, and peace of mind. Driven by a deep sense of responsibility and community, he brings not just expertise, but empathy. Whether planning for tomorrow or protecting today, he guides with clarity, compassion, and a steady hand. Today, he stands before you, ready to share insights forged in real-world experience and built on real human stories. Ladies and gentlemen, please join me in welcoming Vignesh Shankar.
Hello, check. Yeah. Thank you, Vignesh. Wanga, sir. So the reason why I want to put a two-piece session is 90% of successful people underestimate the area they are going to talk about. Everybody runs to make money, and I'm sure you all will make money. Already you made money, but protecting it, it's not a creative solution. I've spoken to many financial advisors. They come and sell what they know. But as far as Vignesh is concerned, he don't sell what he know. He provide a creative solution what we need to protect what we own. So this is what we always encourage. So Vignesh, thank you so much. Floor is yours. Enlighten us.
Thank you. So that's a very, very high bar to live up to. So this is why you shouldn't have Arun introduce you. This is why it's in the business season. Anyway, thank you, everyone. Good afternoon. I know you're all thinking, I've come, spent my Saturday afternoon here. I'm going to listen to someone talk about insurance, probably the driest topic of all. But I'll try my best to keep it as educational as possible and keep it quick. Okay. So we can just start.
Okay, good afternoon, everyone. My name is Raghu. I will be co-presenting with Vignesh. I removed my suit. He is the main presenter. I'm just facilitating this presentation, okay? Thank you to Arun and ATEA team for giving us this opportunity. We are proud to be associated with ATEA from the very beginning and truly value our long-standing relationship with this community. Today, Vignesh will walk through some of the common blind spots businesses face as they grow, and also will share some real examples how we have helped identify and address those challenges. Our goal is simple: to protect what you have built and help you grow with confidence. Over to you, Vignesh.
Okay. Awesome. So a little bit about me, 30 seconds. Started out in wealth management 13 years ago, managed money, realized very early on, hated doing that, and majority of our clients were entrepreneurs. And every one of you over here as entrepreneurs know how to make money, right? So I saw a big area, a blind spot, where people are focused on making money and not necessarily protecting it. So I pivoted my practice, and that's when I formed VOSS about 10 years ago. So we primarily work with closely held businesses, the business owners, and helping them in three main lines of business: comprehensive business owner solutions, employee benefits, and business insurance. So for the purpose of today's discussion, I'm going to focus on the comprehensive business owner solutions side.
Good. So let's get started before we dive in. This is going to be an educational session. So pay attention. We are going to walk you through some key stages of business growth. So let's get started.
Okay, so each and every one of you over here will fall under one of these three categories of business growth throughout your business growth journey: survival, success, significance. So what are these three stages?
It's not going to the next slide.
Should I just talk? Wait.
Click here.
There we go. Okay. So I'm going to use a swimming analogy to explain this, right? So the survival stage is primarily downside protection, right? So when you're swimming and treading in water, right? So this could be a $1 million company or a $100 million company. It's generally a startup, and the focus is generally on downside risk and protecting cash flow. Okay, what are some of the blind spots you face in this area? It could be income replacement, it could be key employee retention, it could be the 4 Ds: death, disability, divorce, disillusionment, business continuity, and buy-sell agreements, and key person protection.
So this is the stage where very little can go wrong. So now let's look at the success stage.
So the second stage is success. So in the first stage, you're treading water, right? In the second stage, you can look up. Generally, this is a business that has positive cash flow. The focus shifts from downside protection to protecting your lost upside and increasing profits and building a sustainable company. So what are some of the blind spots? Number one, protecting the lost upside. So generally, most people, when they start doing some planning, when they're in the survival stage, let's say you're running a $2 million company, you suddenly go to a $20 million company. Yes, you've grown, but your risks also change, right? So that review has not happened. So that's one of the blind spots. Second is, up until this point, most entrepreneurs have put all their money right back into their business, right? This is when potentially you can start looking at asset diversification. The third thing is, very likely you've gotten until this point by relying on your key employees, right? So what are you doing about the 3 Rs? Recruiting, rewarding, and retaining your key employees.
So in this stage, growth is exciting, but the growth also comes with added risk. So let's move on to the next stage, which is a significant stage.
So the significant stage is using the same swimming analogy, right? So you're treading water in the first stage, you're swimming, looking up in the second. Third one is you're actually sitting on the board, and you're asking yourself what this all means. Right? Generally, this is at an exit, and the focus now shifts towards efficient wealth transfer and creating a lasting impact in the long term. So what are some of the blind spots you face? Number one, the thought of creating multi-generational wealth. Very likely, up until this point, you've focused single-handedly on just growing your business, right? So starting to think about creating multi-generational wealth. estate planning, and reducing your wealth erosion factors, charitable goals, and long-term care.
So in this stage, the question becomes less about building wealth. It's more about legacy. So in this video, you will see a business owner running completely focused on growth while blind spots fly right past him. This is real life for most business owners. When you're moving fast, risks are easy to miss. What we'll show next are real case studies of how we have helped clients identify these blind spots early on and put right planning in place so the growth doesn't turn into disruption. Now let's start with a real case study of a client who we helped in while they were in the survival stage.
I'm going to go really quickly here because I don't think we have enough time. But okay, this particular client, survival stage, startup company, $2 million of revenue, $6 million was the valuation, right? So two founders, let's just assume Raghu and I are partners, right? So I own 75% of the company, Raghu owns 25% of the company, right? So some of the challenges they faced when they came to us, number one, they were missing their core legal documents, their basic will and trust. The second is they didn't have a buy-sell agreement. How many of you over here have partners? Okay, so if you have partners, do you have a buy-sell agreement? A buy-sell agreement covers the 4 Ds: death, disability, divorce, and disillusionment. So in this case, Raghu and I are partners. $4.5 million is my share. 1.5 is Raghu's share. What happens to my share in the case of one of these 4 triggering events? So that is one of the things they didn't have. The other thing is they were concerned about preserving the company value because as a startup, the value is primarily driven by the founders. So some of the solutions you came up with, number one, we worked with an attorney to craft their legal documents, their basic core, will and trust, as well as the buy-sell agreement. Now, the buy-sell agreement is just an agreement, right? The second piece of that is actually funding it. So death, for example, right? How do you fund that? So for Raghu to buy out my shares for $4.5 million, he can either pay cash, use a promissory note, buy insurance. So in this case, they found out that insurance is the cheaper way to do it, but you can do any of these 3 things. The second thing is the buy-sell agreement protects the family, where the family gets the money, and now Raghu can run the entire company. Now, Raghu owns the company 100%, where me as a founder is no longer alive. So that obviously affects the enterprise value of the company, right? So that's when you potentially get key person coverage to key person insurance, where money will go into the company, where Raghu can hire and replace my replacement.
So just to clarify, so we are talking about 2 different insurances, right? One to protect the family and then one to protect the company, correct?
Yeah, so insurance is just a byproduct of the planning, but yes, conceptually the idea is the first part is you have to have a method to buy out your partner. And the second thing is the surviving partner needs to have the funds in order to continue growing the business.
Awesome. Okay. So what are the outcomes? We look at, the liquidity for the family is achieved. There's a business continuity, the company value is retained, and also family gets an income. Vignesh, this is a good example. What are some of the key takeaways our audience should get from this slide? This case?
Number one, do you have business partners, right? Second is, if you have business partners, do you have a buy-sell agreement? Second is your family dependent on your income? The third is your business dependent on your income and you being there? And the fourth is, do you have your basic core documents?
So as you can see that the planning turns uncertainty into a clarity for both family and the business. So now let's look at another case study for someone who is in the success stage and see how we have helped them solve this problem.
So the long and short of this is the company grown $40 million in revenue. They've quadrupled over the last 4 years. So they came to us and we uncovered a bunch of problems. Number one, the first problem was what's true when you're doing $10 million of revenue is not true when you're doing 40, right? Your valuation needs to be, so the rapid growth means your valuation needs to be adjusted, your insurance needs to be reviewed, and generally everything requires a review. The second thing is, even though they've grown a lot, they were still concerned about the owner's untimely passing, and the owner had grown this far because of 2 of his key employees. So he wanted to do something in order to reward and retain them, but without giving up equity. So what did we do? First thing, we worked with an outside valuation expert and completed his valuation, business valuation, $60 million. Then we covered his personal insurance and legal gaps. And the third thing is we set up a non-qualified deferred compensation plan. All that means is basically now the key employees were retained for the long term and aligned with their long-term goals, while the owner didn't have to give up any equity to do that.
So as you can see in this stage, the outcome of our solution was, all the documents got updated with the current valuation, and the retention plan is put in place for the key employees, and also some asset class diversification got initiated as well. Vignesh, for someone who is in this stage, what are some of the key takeaways?
Okay, first thing is, again, you may have done something when you were in the survival stage, but have you reviewed those documents once you've gone up as your business has grown? Second thing is, what are you doing to recruit, reward, and retain your key employees? The third thing is, have you started looking into estate planning? Because this is probably the first time where you're making more money than you're spending, right? So you got to start looking beyond just yourself. The fourth thing is, finally, all this requires money, right? So you want to make sure you have a good team of CPAs, attorneys, financial advisors, insurance advisors working together to make sure that these strategies are funded efficiently and sustainably.
Awesome. Now let's look at another case study for someone who is in the significant stage. This is when you have made a lot of money and you have exited. This is a perfect example for that one.
So this particular person, late 50s, grown a significant 9-figure business, and not unlike most people in that stage, high level of expertise in his business, but focused only on that and has done zero planning before he came to us. So he's very charitably inclined, and his main concern, number one, was that he had a huge estate tax liability. So in this country, at least in Texas, if you're worth over $30 million as a couple, there's this thing called the federal estate tax, which is basically a death tax, right? So there's a 40% death tax if you're worth over $30 million, if you do zero planning. And it's due within 9 months upon the second spouse's death. So yeah, he was worth $160 million. He passes away tomorrow, $50 million in taxes. Family's fine. No one is going to be complaining. But this is not about that, right? I mean, it's about reducing some of these eroding factors and maximizing the wealth that's passed on. So one of the first things we did, So one of the first things we did while this pulls up is, again, so because there was enough time before he was going to sell his business, over a year, so we did some pre-sale charitable gifting and helped reduce his capital gains exposure. So the second thing is he still had some estate tax exposure, and rather than funding it with cash, we were able to fund it with trust-owned life insurance. And because he has significant expertise with finances, we were able to finance it as well to add extra leverage for him over there too.
What are some of the outcomes? As you can see, estate tax exposure is minimized, wealth is preserved, liquidity is secured, and also through some financing strategies, we found a cost-efficient strategy to fund all these insurance products. Life insurance, in this stage, what are some of the key takeaways if someone is in this stage?
First thing is, very likely, if you build a business this big, you have a very, very good executive team, right? You have a CEO, CMO, CIO, everyone for your business. Do you have that for your personal wealth? Do you have a good attorney? Do you have a good financial advisor, good CPA, and are they all working together to actually make sure that your goals are met long-term and are going to be sustainable? The second thing is, what kind of impact do you want to leave? At the end of the day, this is no longer about just money, right? So if it's charitable, do you want to pass on money to kids? What do you want to do? And what have you actually done to plan for it? And the other thing is, there's only that much you can do on your own. Is your family a part of this planning? And if you have kids, I would encourage you to make sure your kids and your wife or husband are included in this planning, because it has to outlive you.
Awesome. So as you would see that, insurance is not just about one need. When used alongside with other tools and strategies, this can be a powerful vehicle to solve several of the business problems. In the survival stage, it helps protect the downside, and in the success stage, it helps protect the upside. And in the significant stage, it becomes a powerful tool for legacy transfer and the wealth transfer, etc. Right? Vignesh, all this sounds good, but our audience may have a question. They may say that why should they work with VOSS? No?
I don't think it's about working with us. This is about you. The most important thing is that this is one area that we see there is lack of awareness when it comes to financial planning and thinking beyond what you're doing today, right? So what I would highly suggest is find someone to work with that understands you first, and then that they have the actual competence to see through those goals, not just for today, but for the next couple of generations to come. And being part of the ATEA family, happy to be of a resource, and just, you can talk through any of these things with us. I know there's so much information out there. Pretty sure 99% of what I just talked about went over everyone's heads. So, and that's how it is. But I'll say start small, one at a time, and this is not a one and done process. And we're here to help you along the way. Thank you.
Thanks, Vignesh. Thanks, Raghu. That was outstanding. So let's give a big ovation to Vignesh for sharing valuable insights into how you can consciously bring in awareness intelligence to protect your success. And one of the forms of success is wealth, and it is very important that we protect our wealth. If there's like one takeaway I would want you to get out of this session is, how many of you are connected to Vignesh already? Okay. They all can assure you, irrespective of whether you are going to become a client of Vignesh or not, give a call to Vignesh or meet Raghu. Raghu is going to be in the foyer, okay, where they have a booth. Have a conversation with Vignesh or Raghu for a couple of minutes. You will find it so profound. He's someone like who doesn't hesitate to share his knowledge and wisdom to anyone like who talks to him, irrespective of whether they are a client or not. So as a token of appreciation for Vignesh and Raghu, may I request the founder of American Tamil Entrepreneur Association, Lena Kannappan, to hand over the small memento to Vignesh and Raghu. Thank you.
Just forgot to mention, we also have a raffle, one giveaway today. If you all come to our booth, scan and then register your name, maybe you could be a lucky winner. Thank you.
First of all, congratulations to the entire ATEA South Central team for putting together another fantastic conference. Thanks, Vignesh. There was a very, I should say, thoughtful presentation, more than as a vendor coming here in front of the audience. I feel there's a lot of good things take away. I would encourage you to present to the entire ATEA community across all chapters.
Absolutely.
I think that'll be really wonderful. So would like to definitely support from Silicon Valley, and also would make it a point to spread the message across the country. Yeah, thank you.
Thank you, Lena. Thanks,
Thank you,
Vignesh.
everyone.
Thanks, Raghu.
Thank you.